So welcome everyone to this latest edition of the Sharesify Talks Shares podcast. And as usual, I'm joined by my friend and colleague, Ian Conway. And as another surprise, we've got another person on the podcast. We welcome another long-time friend and colleague, James Crux. You all right, James?
Yeah, hi gents, how are you?
Very good. The rumours are true. The rumours are true. He's on the podcast.
We're really pleased to have James on board the Sharesify team. So this is all good news. So strengthens our hand going forward. And talking about strengthening your hand, it was only Friday, and you and I were chatting about Elon Musk and SpaceX merging potentially with XAI, and a couple of days go by, and no sooner said than done. He's announced it. He's gone and done it. Quite an amazing story, really, considering the size of those companies.
It really is. I mean, that's just dominating the news flow at the moment, isn't it?
Yeah.
The whole thing, about SpaceX and AI, and I mean, it's I can't keep up. It's moving too fast.
I mean, the interesting thing to watch, I suppose, is to what extent he sees Tesla as part of this wider family, because the XAI and SpaceX merger has some sense in that he's got ambitions now to put data centers in space. So this is very bold plans, but Elon Musk is always big on bold plans. How Tesla quite fits into it is a bit less clear, but we'll watch and see how things go.
And I wonder whether that's the case for investors as well, to an extent, Steve. When SpaceX does float, do investors own both? Do they own Tesla and SpaceX? Do they just go all in on SpaceX? I wonder how that's going to play out.
Yeah, absolutely. General markets have been all right. Europe was starting off really quite strong this morning, and that's sort of tailed off. The UK's doing all right. The US did reasonably well, largely back down to tech earnings. What have you noticed about the markets here?
Well, we've got new high in the UK again, Steve. Everything's going all right. Company reports are okay. We had a very good update from Plus 500 this morning. That stock's at a new all-time high.
Right.
And we talked again last week, didn't we, about prediction markets?
Yeah.
So they're moving into the prediction markets. This is big. This is like a $50 billion.
We predicted the prediction market.
We did predict the prediction market. Yeah, get us. No, it's a big market. I mean, Reuters reckons it's something around $50 billion a year. It's where you can basically bet on a binary outcome of a political event or economic event, say an election, or even like things like the non-farm payrolls you can bet on. And it's growing really fast. And to their credit, Plus 500 get this, and they're there, and they are playing a blinder, whereas things like your traditional betting companies, Flutter cut its outlook for 2026. Evoke actually pulled its outlook for 2026. It's having a strategic review. Yeah. So the Plus 500 is where the money is.
Yeah, interesting stuff. James, you've been sort of scanning some of the drinks companies in the UK and elsewhere recently.
Indeed, yeah. Plenty of action in the beverages space, Steve, and an interesting deal today with AG Bar, which is the Irn Bru owner. They bought a couple of deals they've done, one of which is Fentimans. And if you look at the price action, so Bar is up nicely, but Fever Tree's actually down. So obviously I think investors are factoring in that Fentimans could be a more muscular competitor to Fever Tree, perhaps in the UK market. Yeah, so I think that's one we'll definitely be watching. And then across the pond, I
suppose Fever Tree was always, its biggest competitor was always Schweppes, wasn't it?
Yeah, Schweppes, the old sort of behemoth of the sector. But that'll be an interesting one to watch. And then just across the pond, you had Starbucks with their first US sales growth in 2 years. So I think that shows that Brian Nichol, who's a bit of a rock star CEO, he's starting to deliver a turnaround over there. And perhaps that heaps a bit of pressure on PepsiCo, whose earnings are out later today. Yes. I don't know if you've got any thoughts on that, Ian, in terms of what we might see. Sort of, it's really about the volume growth, is it?
It is, as always, James, as you know, all these fast-moving consumer goods companies, it's price and volume, isn't it? So we'll see what they do if they manage to hike prices. I mean, it is such a sticky brand, It's not as sticky as Coke, but it's still a very sticky brand. Plus, of course, don't they also have a lot of snack brands as well?
Yeah, I mean, that is the big differentiator, isn't it? They're much bigger on the snack side than Coke is.
Yeah, with the sort of US consumer under a bit of pressure, and then you've also got perhaps concerns around GLP-1s for weight loss drugs and what that might be doing for snacking generally.
Yeah,
that also leads into Mondelez, who've also got earnings out later. They're the dairy milk and Oreo cookie maker.
I mean, it's great, isn't it? That you see how connected the global economy is, and we're talking about Pepsi, and then straight away we're talking about weight loss drugs and how they are interlinked. It's just incredible.
Yeah,
indeed. Absolutely. Yeah, and then another big consumer goods name next week is we've got Unilever, so that's one that's looming. And
sure, yeah, we've been talking about that on the podcast for a couple of weeks. And saying about how it's also quite an interesting angle into Finsbury Growth Trust as well, because they've got a big stake in Unilever. It's just such a champion company for decades, and it just seems to have really lost its way over the last maybe 5 or even 10 years.
Yeah, I think you're right, Stephen. And now they've kind of spun out the Magnum ice cream company. It's a more sharp and more focused business. So I suppose investors will be looking for clues to see if that they're starting to get a bit more growth into the business, and whether Fernando Fernandez is delivering a bit more growth, a bit more pep into that name.
Yeah, I mean, overnight we had some interesting, and yesterday we had Palantir results that were very good, very strong, and very, very optimistic and positive. So the shares popped 11% overnight, and of course it's become this incredible AI superstar from almost out of nowhere. But the key thing I think here is that it's got a lot of government contracts, and the sense is that government contracts are likely to be more sticky than enterprise contracts, on the basis that the vetting process is likely to be that much tougher. And you're talking about them working for things like the Department of Defense in the US. And you don't imagine you get to work for the Department of Defense unless you've gone through a pretty stiff vetting process. But once you've passed, it's difficult to see you getting dropped unless you really drop the ball. But Palantir's got such an array of AI tools now. It's really starting to ingrain itself. The question is, of course, is how much is in the price, and that's something I covered in a piece I wrote this morning. It's on such a full valuation. Should it really attract new buyers? Who knows? Yesterday as well, we had Disney, and I know the House of Mouse was something you were watching yesterday.
It was, Steve. Yeah, they beat forecasts. It's interesting. A few firms have done this. We had Visa and Amex last week. Beat forecasts, stock goes down, and the stock dropped about 6-7% yesterday. The numbers were okay. The outlook was okay, but there's a couple of things that they're cautious on. One is rising production costs of the entertainment business and the video streaming business, and also their parks. They made a very interesting comment about international visitors, basically headwinds for international visitors going to their parks in the States. Now, I don't know whether this is a result of ICE rounding people up and people saying, I'm not going there, thanks very much. But they definitely see that can be an issue for 2026 for them. Yeah. So one I'm looking at for later this week as well, James, is Shell, because there's a very interesting story in the FT yesterday saying European oil majors are going to cut their buybacks by about 25%. And of course, firms like Shell, they've spent half their cash flow has been going on buybacks. Yeah. So we'll see what they say on Thursday when they report, because they previously regarded that as sacrosanct. But you could be looking at a cut of 500 million every quarter. That's 2 billion less in buybacks. Yeah. And of course, that's gone some way to supporting the share price of these things.
Absolutely. I mean, the big share buybacks of the sort that Shell do, I mean, they really do under they provide that foundation layer, don't they, to valuations. So they really do. PEs might be relatively low, but they don't tend to go too low because of that massive reinvestment of capital back into the business.
Yeah, I mean, UBS reckons something like 20% of the European oil market capitalisation has gone since 2021, just due to buybacks. And of course, what they don't want to do is use debt to fund these things. But if they haven't got the cash flow because the oil price is so low, and of course the oil price is down about 20% over the last year, then they don't really have an option. So if you're a Shell shareholder, keep an eye out for that on Thursday.
I suppose there's always the loose cannon of Donald Trump in the background, though, to send oil prices spiking at any moment in time.
in the short term, but it's been remarkably sort of consistently going down despite his best efforts.
Yeah. And James, I know you were looking at some investment trusts the other day, and ones that quite rare, I suppose, in this current environment. Ones that are actually trading on a premium. What kind of snippets did you eke out of that piece?
Yeah, I think demand for income was a theme that comes out there. So you got the Invesco Bond Income Plus and Henderson Forest Income were sort of well bid names. Interestingly, one name that's come from a sort of discount to it's narrowed quite a lot is Smithson, which we've got a story up on the website about. So that is going to convert into an open-ended fund, and there's some dates in the diary for investors, 10th and the 27th of Feb, to vote on those proposals to convert from a trust into an open-ended vehicle.
I think it's going to be, I mean, to me, it's interesting in terms of the signal it might be sending out to the wider investment trust space. Is this something we're going to see more of? I understand Simon Bernard's been frustrated with discounts to NAV and so on, but I mean, converting to an open-ended, on the one hand, you could argue it might be a one-off bump, but does it actually make it for a better investment for investors longer term? I suppose it depends on which side of the table you choose to see it.
Yeah, indeed. And it's very much focused on sort of quality, global, small and mid cap. So I guess those kind of liquidity issues with an open-ended fund might not be so much of a worry. I guess we'll see.
Yeah, perhaps. So tonight as well, we've got some after hours big movers. AMD, the big chip designer, is going to be unveiling figures. And in the coming days, you've got Return of the Magnificent Seven. So there's Google to look out for tomorrow after the close on Wall Street. And then on Thursday, there's Amazon as well, which will round off 6 of the Magnificent Seven. Nvidia normally reports sometime around the end of February. Anything you're looking out for over the coming days, Ian?
No, Steve, that's it. I think we could probably wrap it there, but we're going to have a lot to talk about on Friday, aren't we?
We certainly are, yeah. And you might be away on Friday. Is that true? Is that a rumour?
Yeah, the rumours are true.
Well, it's just going to be me and James then carrying the can. Well, I'm sure it'll go swimmingly well. So that's a wrap. Thanks everyone for tuning in. Hope you enjoyed it. Get in touch if you want to. editorial@sharesify.com, and we will see you next time. Take care.
Cheerio.
Cheerio.